Alright, welcome back. It's been a long time I have not recorded a video about the market. There's a lot been going on so far. You guys probably know why, but here we are, back at it. So, we're going to talk about footprint. Footprint can be very useful to determine certain places of interest that the DOM is just too fast to catch it. When there are a lot of numbers, you are getting distracted most of the time, right? Some people can do it. A lot of people can do it actually with just DOM only. And some people utilize the footprint. And I will show you why it is a good tool for order flow. And basically you can see how the candles are formed, right? We already talked about this. So this is the 9th, I believe, of December. And one of my guy asked me how we could possibly know to short 75 here in this level, or how do we detect it in the footprint, right? So let's talk about some kinks in the volume profile that we talked a lot about it in chat. What are all the lessons that have been taught in the past, right? So this is an island, right? Price drop down and forms a little island here of interest. Trades are kinda, no, I'm sorry, not kinda, fighting. This is where the real fights happen. Not up here, not up here, but at the edge. This is where most of your edge, what comes from, are these extremities, right? So we drop down quite a bit from 53 to 40, 40-ish, right? So this is the psychological numbers, right? 40. And as you can see, we either drop down pretty close here, and we trade down over here, right? Yes, you can see it's an island here, taper up. So they are fighting in roughly 1 point, 1 point up and down. So this would be a tiny ledge if it pan out for a few minutes. This is a 15-minute candle, by the way. I do not know how long it lasts. Let's see. So that was the drop. So a little bit of context. This had been the base, right? So you should take a note of this pre-market. Okay, you should look at the structure pre-market and see where we are trading from, right? So pre-market we kind of pumps up and then we drop back down, and technically this is a support, right? From a candle standpoint. So you already see a basic move, right? A retest essentially. So, okay, let's see, 1 minute. We trade big here. So, oh, this is interesting. I have not looked in the market for a while now. So we went down, push it back up, and then drop down one more time to basically a stop run. This is amazing. Yeah. If it, okay, like this is another kink. If a stop run and there's no follow through, the next candle is not red, or the next few candles are not red, a continuation here, and this is, oh, this is a very key. All right, so it matched with my kind of my strategy as well. So you look into this 1 minute candle and you look for this ledge to take out, right? So either way, like you don't know where it's gonna go here, right? But you know there's kind of support here, and we flush down, right? We flush down, hit to the support, and this is, like I said, this is where the most critical level. This is where you want to be right or wrong the fastest, right? Either bounce or flush all the way down to 16, right? So you got like 20 points here. So either up 20 points or down or retest here from 65, right? So 30 down, 30 up, okay? So this is the area you want to trade in, right? You want to see, this is where you want to look into the DOM, right? This is where you want to watch the DOM and not some here or here. When the move is already reversed, you you kind of eased out on DOM reading, set your stop, and let it work for you. That's how you kind of preserved your energy, be more resilient, right? So flush here, if we kind of do something like that without hindsight, your target profit should be around 55, right? There may be a runner, left a runner to 65, 60 area to retest, right? This account for any kind of up move kind of day. You just want to check your profits within the lows and high of the pre-market, right? Because, well, guess what? We can't predict what what the future is. So we're just gonna play with the past here, right? And then we have this area. It fights and then push it back up. Okay, one as we get out of this. So if you see, they are big chunk of profile here are the contracts are trading, right? So now as we're heading away from this area, either side has to puke, right? And then you join that side. If it flush, continue to flush down here, you sell with a stop up above here with the acceptance. Okay, so one way I play stops is I would place, if in this context, I would place around here. So disregard that, right? If I were to short, right? If I were to short, I would place my stop contextually around 42.50, assuming this candle is closed, okay? 42.50 around in here. Because above that is an acceptance area, and I don't want to place my stop up here. Okay, this wet whipsaw or whatever. I would rather take a loss down here instead of up here. And down here is 41, up there is like 44, 45. So it risks my offset. I offset 3 points of risk. Okay, if like think about it, if it passed my 42, and it's definitely probably gonna go up to 45, and then whipsaw or do whatever it wants, or even going higher, right? If it does not accept and go back down again, I'm fine with that too. But I probably won't trade that because my point of view is not uh, congruent with the market. It's just a false play, right? So if I were to short somewhere down here, 39, my stop will be at 41, right? Or let's say a bottom tick, 38, 37-ish. Try to short this for continuation, okay? My stop would be at 41.50, right? Because as you can see right here, as we get up above 41.50, we have acceptance again, and then another push to up here to fill this area. So if you remember the past lessons that I told you, if it bounds on the balance area, it would likely to test the upper side of the area, right? Test two extremes at a time, okay? Because it's trying to find a balance, trying to find the POC, right? The point of control is trying to find the value area. What is the value price? Okay, so this is where we want to trade. Okay, let's say you watch of this happening and then it goes away from here. Now you can long. Okay, if fast enough, well, I would say if you're lucky, and if you be like, okay, this is the, or you're just playing with support levels over here, and then you're trying to go with the market, or have a bet. What the fuck? Then you can do it, but this is not what we're here for. We're not making nonsense bets. We're trying to make an educated guess or some sort of planning, right? And like I said, don't try to bottom tick or short the top by the bottom of anything, because buying here is all hindsight. In hindsight, it's a great buy, but you don't know when it happens, right? Uh, These are pretty balanced, right? Look at numbers: 8 to 3, 6 to 6, 5 to 4, 400 basically to 500. Basically, it's pretty balanced in a way. So I cannot make any. There's no edge. There's no nothing in here for me to do something about it, right? And then I see a single digit down here, right? That's just exhaustion. There's just not much to it. The moment you see 24 and 5, the fucking thing already pump up already. So um, looking at the numbers, they don't really mean anything. But what does matter is the whole as a whole, right? The total volume. As we get up here, imagine this is a tiny volume profile, right? This is the value area. This is the POC. Now, when it go above it or below, it's going to price seeking mode, right? So now it's gonna, if it's headed towards up here very swiftly, this is probably a pump, like a run up or a sweep, my bad, a sweep, and then it kind of trade back down a little bit and then pumps again, right? According to that 1 minute. Let's see, yeah, went down 37, pumps up right again, trading over here. Trading around this 40 to 42 area, right? Now, you can safely buy here, right? You can safely buy up here at around 41, 42, 43-ish, right? And then have a stop below 37. Or better yet, if you want to tighten your risk, put a stop here at 40 or at 39.50 at the edge of this tiny profile, because because when it starts going down again, it's probably going to drift down to this area. But keep in mind, this is very risky or very um, tight move of a stop, right? What if usually It went up, right? And then revisit here. It revisit this island and then push it back up again. Now you're out of your position, right? You don't want to risk that. So you can buy it up here, 42, have a contextual loss at 37. Okay, 37, perfect. And then you gauge, okay? Now this is with experience you can gauge, right? Or basically think of it as a volume profile, right? So you have this right here. This should be tapered out, but I can't draw. But anyway, as with the rules that we already discussed, if it tests and bounds here, it's probably gonna come to this area. That's your first target profit taking point. Maybe you have a runner up here, okay? And how many points do we capture? How many ticks right here? We said we're long at 40, let's do 43. That's 54 ticks. That's more than 10 points, right? That is 10 points already. 40 ticks. And then you have 80 ticks here, so that's 20 points. That's how you get to 20 points in 8:45 to 9 o'clock Central Time. 50 minutes, 20 points. A great scalp. Okay, that should be done. You should be done. 20 points a day. I take that any day. 20 points. Yeah, aim yourself. At first, you can do when you're new, your first month. Try 5 points at first for 2 weeks. Okay, get to know how to read, how to exit, when the DOM tells you to sell. This is when it comes later. Okay, but that is also have some cons to it. Because look back, because sometimes short, let's say you short here and then find support here, and then this is basically the DOM telling you to stop out, right? To cut your profits, and you kind of miss out on these. So it really depends. Okay, it, I would say it comes with experience. The more you trade it, the more you kind of know. And And I think you already know this from reading all the volume profile stuff and videos that I taught you before when we're dealing with balanced day. If we test the extreme edge, we're gonna test the upper edge, most likely. Okay. 60% of the time, maybe more. Okay. It's just that kink of a balanced day. It is. Right? So island pump 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 to 65. Okay. Now from 65 and we kind of push up all the way. So this is 1, 2, 3, 4. 4 bars of 15 minutes. We kind of trading sideways at first, right? Kind of hover this down. We trade acceptance here a little bit and then push up to find more trying to find more sellers or advertising the price higher to see if people will sell. So here you find this. Yeah, ignore this for a second. Just focus on this one right here. So you have a nice island bell curve, and then boom, this one at 75, some absorption happened, 700 to 500 ish. So that's a pretty big ratio. By big, I mean 1 to 2, 1/2, 1/3. That's considered pretty significant. It's like this, it kind of light up here. But I think Jigsaw kind of messed up because it goes horizontally, not diagonally. Okay, so we have some sellers trying to hold the market, and then upticks to 3 ticks here, and then go back down, right? Because it closed here, right, at this rectangle. And then we hop to the next bar, right? We retest this area and we pump up again. But now guess what happens? There's still some trading at 75, trying to push it below. There's some battle here, right? And we push up, guess what happened? Right here, tapering, right? Very fast tapering, probably. Let's take a look. Yeah, very fast. Okay, we hit 75 again, push up 3 ticks, went back down, retest that, this area right here, and then it's trying to push again, and then it drop back down. There's a wick, okay? That wick tells you, okay, this is basically an exhaustion, right? Kind of trap these people out, tapering, trap these traders, and then the lower we go, right? So you can take a short from this kink in a volume profile using footprint, and it's very useful for these area and little risk actually. Like you see this tapering already, try to push down, combine it with that candles, okay, push down here, you can start shorting here, right? If you're slow, short around here 72, contextual stop at where? Where would I put my stop in? If I short, where did I say short again? Let's say short here at 72. 72. So down here, okay? Where would I put my stop? Pause the video and think for a second. If I short 72 according to this chart, where would I would I put my stop without risking stop? Without some kind of way, some like let the trade go against you for a bit, but still in the trade. What kind of safe? And you have to be safe too. Don't tell me it's like 10-point stop. Okay, that is not acceptable. We're trying to minimize our loss and maximize our profits. So what is the midway of risking little or and then between risking little and having for it to run against you just for a bit, right? So your best stop it would be 1 tick above this line. 74.50 according to the last candle, right? So I would have my stop around 75 from this tapering area, right? Because if it goes up, we kind of have acceptance on this tapering, right? It's gonna fill this taper area out, and that would invalidate our plan, right? That is where we're wrong. So you put your stop where you're wrong. I've been telling you guys to have a fixed stop of 12 ticks to 15 ticks, right? But what is that? 4 points, 3 to 4 points. 8 ticks is 2, right? So even if you're shorting 72, that's 74 for 8 ticks, then 75 for 3 points, right? You see, with the last psychology video I showed you, you want to trade where your contextual stop and then your fixed stop are the same. Try your best. Where you're wrong contextually, which is over here, 75.50-ish, versus your fixed stop, which is like 12 ticks or 15 ticks or whatever you pick. Right, trying to narrow it down as much as possible, and then you take a trade. Okay, and that thinking should be done in a few seconds. Right. And as you keep trading, as you make mistakes, and then you learn some, you make some profits, you lose some profits, you lose some money, it will click into you. And it's very important why it has to be this way, right? First of all, it protects you from losing the account if you're trading tick tick. Or just basically losing money overall. And second, it has some sort of discipline or some kind of data that fixed controllable data you can record, right? So try your best when you do execution to have that stop as close the fixed stop is as close as the contextual stop. That would save you so much trouble, and you yourself in your body, in your mind, you don't have to fight, right? Because if you're shorting somewhere around here and you heard me, oh, Matrix said I only have a fixed stop of 12 ticks, but contextually, um, if it's trading up here, right, and it went down again, it would stop me out and it goes my way, right? Ever had that happen to you, right? It stopped you out and it traded your way, right? And then you're kicking yourself because if I widen my stop out, it would be fine, right? So that thinking is also a bad thing, right? You have that thinking because of that reason alone. Your fixed stop doesn't congruent or doesn't fit, or it's the same with your contextual loss, stop loss, right? So you have that thinking. If if you short at 52 and you have a stop at 75, and your stop on two types of your stops are the same and the same point, and you will feel much less stress. Trust me on this, and you can feel it right from what I've been saying. Oh, my stop is 3 points above, and my contextual stop is also 3 points above. I'm kind of chilling, right? I will let the market do the thing, okay? Because I know where I'm wrong. Versus down here, I know where I'm wrong when it gets up here, but Metric said my fixed stop is down here, so I have to take the L. And maybe if it gets up here and then I was shorted, and then my stop would be over here. But guess what? Sometimes it just doesn't get there. Right? It just go. Okay. So we've come to go down. We go back to this acceptance area at the open, right over here. We kind of trade it over here. At this point, if you short, you might want to get out, right? Acceptance area. It moved from acceptance to acceptance area, right? Taking out this. So if you short around here, that's another 30-minute hold. Okay, so around this 55 level, that should be your way out, and then you wait. Okay, that will save you all this trouble from this headwind. And then it retests. Comes the retest. It actually retests twice here. If you want to go long again, for sure do that. But I want to take a look at this 75 retest again. Okay, and then what leads to that? So after lunch, we kind of push, bull flag, reach here again, wakes up 3 times, and then gets shot down. And what does that seem? So now we're going to talk a little bit about auction market theory, right? Acceptance or not. So we know this area was not accepted, right? So if you don't even short over here, right? So here's your chance. Here's your second chance of shorting. Let's disregard this bad plan that they just planned out, right? I would probably not short on this side. And if I do short, I would short down here and get stop out. right? So, oh, one more thing. This area, this becomes the support. How cool is that? You can flip it out and you can see that on the candles. You probably see that on the footprint as well. See just a tiny tapering here. That shows you that if once it becomes resistant, now becomes support. Yeah, you can long just a tiny scalp off 5 to 10 points. Here it gives you what, 65 to 75, 10 points. Yeah, sure, good play. This is all just hindsight. If you're playing 15-minute bar on another 15-minute bar, this would be perfect. Depend on your strategy. I don't know your strategy. You should need to backtest your own strategy and find your edge. But here I want to talk about this right here. So we're gonna pump up, right? Flagging, right? Push up, flagging here a little bit, showing this area right here. As you can see, big flag, and that is done. Right, blue flag is done, complete. Now what next? But next is we're trying to find acceptance. Now it become a critical area, right? Just like down here. If you give the retest, down here I'll give you a retest of this area, right here. Now I'll give you a retest of this area. Guess what? This is some kind of edge you can form, right? Statistically, right? And now we just look for execution. Either way, we're right or wrong on this area, which dictates the move, up or down, 10 to 15, even 20 points. Okay, so you can, if you're wrong, you can flip it and you're gonna go long, or you go, if you're long and you flip it, you can go short, right? Because we don't know. We don't know what's gonna happen. That's how you make up those that first stop out, your loss, right? You want to be right or wrong the quickest, so that way you risk the most little, or you're gonna get a lot, right? Okay, we get up here, 75 once again, testing this tapering. So now it is filling this area. Okay, and if you're shorting, let's say if you're shorting over here, right, and then you kind of hold. Guess what? You're trapped in this area. You don't know what to do, or you don't find any kind of supported or whatever. Maybe you stop yourself out here, or it's gonna go back up here and you stop out, so you gain this much from here to here. That's fine. Profit's a profit. But if it's been going for what? Okay, which drop, sharp drop down, once again, drop again, and then bounce, and then kind of hover in this area for what? From 9 to all the way to 11:45 to 12. During that time, it has not doing anything. There should be a ticking clock. Tells you, hey, this is a lot of uncertainty. There's no edge for me here to hold on to this trade, right? Don't marry trade. If you're aiming all the way down here, it might not work. It might not work at that instant. At that time, it's not the right time, right? So and you know it's lunch, and I tell you what, at lunch, stop trading. And what time is that? 11, so 12 Eastern, right? So you probably stop somewhere around here, right? From 60, actually 10:45, so somewhere around here, or somewhere around here, right? 67 to 60, and you're short 62, 72. You could either stop yourself out of 67 or all the way down to 61. So it's either 5 points or 10 points, right? After that, you wait. You eat lunch, you relax for a bit, right? That's if you don't know where to get out, right? If you do, guess what? Acceptance here, trying to trade here, so you're getting out of the accepting area, right? There's no point holding on to it, because once it get accepted like this, it's very hard for you to know which way it's going to go. What if it's just going sideways? Because it is accepted, right? It is acceptance. So it could trade, possibly, the whole day. And we kind of did. You see, it touched one, two, go back again to this acceptance area at the end of the day, right? At one, and it just hovers around here without me even looking at it. So you know from the beginning there's acceptance over here, right? So your your strategy could be shorting on the extreme and close at the POC or the value area, right? Play the extremes and close it there. So that could be your plan, okay? And we just trade in the value area. So whatever you're trading here is all bullshit. It's all planning, bad planning, bad planning with low ROI, right? With little to no expected value. You want a high positive expected value. You want a better risk to return. Well, these are your area. This is your critical area, and you get out where it's accepted. That could be your bread and butter. Okay, you could long over here, and you close around here, accepted area. That's already what 10 points or whatever. You play the extreme, and then you close at the acceptance area. Right, that is your strategy, and I would say that that could be your main strategy. I trade that a lot. I trade that a lot. Right, don't don't aim for home runs. Just a little batting, just a little touch. Okay, hit it to base 3, run it to base 1, done. Boom, baby. Let the next person do the rest of the work. Let the next strategy do the work. Okay, buy here, you close here. That's 10 points already. You sell here, close down here. That's another 10 points. Okay, no need to be, no need to aim for much, because the more accepted in this area, the more uncertainty will come. Right? You're trading very big range, and then you whipsaw out on this area, right? Let it does its things. Let it retest, right? Chart look like this. Closer trades here, you'll be done. And then you only interested in taking a trade when it gets up here or down here again, right? Do we see it rejected, or do we acceptance or continuation, right? That is your bread and butter. That should be your trading strategy. That's mine. You can use it, right? It's okay. It only goes up and down, right? Study, study the plan, study all this shit, figure out how to utilize this strategy the best you can, and work on your execution. Okay. Okay. Get back. We kind of accept. We kind of trade up here. Guess what? And then we got rejected 3 times. You kind of. So your dom should go up. Your dom. Oh, great. Huh. So it looks like I got no connection here. So I have to email tick. Oh, right. So let's just say this is 75, right? It ticks down, it ticks up one more time, it ticks up another time, and the third time it ticks up, it cannot push through here, right? We see all the sellers are trying their best to hold off this area already, so there's no point. So this is of it saying the buying pressure is kind of died out, okay? And you can see here very closely on just this two candle. We have double distribution, right? Now, one cool trick that I use, if I see a critical area that I like to trade, you see this 2B, like a B shape right here, and then So we don't know what happens. So I like to incorporate it with candlesticks too. Where is it? Oh, so on a candlestick it looks like this. I forgot what the name is, but we push again. This is basically a second retest or a second chance, right? Then we narrow it down to here. Same thing, right? If the market's so strong, why it should have been breaking out by now. So when I say that I'm talking about this area right here. I'm not talking about here or here, whatever, right? If the market is truly strong, there should be a volume breaking out, right? But there's no volume, little to no volume here. Comparing to a big push like this, where you see a big range of volume, continuation of breaking out. But here we get trapped. We trap the longs, right? We trap all these longs here. Sellers are holding the ground. So if you keep pushing, 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 it hits the wall, that's your cue to get out of the long and start shorting, or start shorting when you see that, right? So disregard everything, just these two candle. If I'm to be close here, okay, so it opens up here and trading down up here, okay, trying to find acceptance up here on this next candle, I believe. Let's see the 1 minute again. Okay, wicks up, wicks up, wicks up, doji, holding, and then drop, right? Now, once you see this drop, right? Once you see this drop, that tells you, okay, I think the buyers are getting trapped here. And as according to the footprint and everything, there's not a lot of volume following through. And then sellers, see, 924 to 650, 800 to 600, 400 to 100, 200 to 1, right? And these traders, I think they're gonna get trapped. So as we go out of this area, so there are two balanced bell curve here. As we're getting out of that, so where's this? So 72. Okay, 72. 72. Oh, it's all the way down here. So so if this drop is here already and you don't see any of that, 73. So it's still up here. Okay, that's good. So it's still up there. It's still trading in this area right here. So just keep bouncing. And then drop to 72, which is the edge of this balance. And remember what I said about the edge, right? This is where you put your stop, right? Remember this? I will put this is why I put a stop on the edge, like over here, right? Because guess what? The moment it gets into it, let's say if you're long, right? If you're long here, the stop should be around here, 72. That is where you're wrong. So guess what? If you don't have that plan and you don't have that long, this should be your entry. Am I right? Kind of reverse. Like think about it for a moment, right? So your short area would be here, and then your stop, of course, would be up here at 75, 75, 75, 75. Yeah. So you short here, right? Start shorting as it gets out. So you can short from 72 to 70, right? I think this moves pretty fast. Let's see. Yeah, it was swiftly down too. So let's say it goes here. See this ledge. Okay, you see this ledge? This is the ledge. So this is where we would like to trade in. This is the critical area, right? very tiny movement, very big battle, just ticks away, right? Not a big swing like this, but tiny ledge. This is where I like to trade, okay? And if it breaks out, it's gonna keep falling with the momentum. So it goes to 72. That's break out of the ledge. That is the breakup structure of this ledge. That would be my entry, right? 72. Pretty much textbook at this point. Here you just see a constant drift down, right? So now you have your signal of shorting. That's the signal. As you get out of this volume profile and the candles are making that, breaking out the ledge, combine those two contextually and we're hitting here, combine it with that AMT, right? Auction market theory, we reject of this tapering area. We're seeing that the bulls are not bullish enough. There is not a lot of follow through volume. So guess what? I'm gonna go short. You see how much planning we have there, right? How many uh, points that supports our thesis, our hypothesis, our plans, right? The plan is basically a research paper or making or proving your hypothesis, right? You're guessing, you hypothesize that we are going to go down. So there has to be a proof, right? We have to be some supporting ideas, right? To show the readers or whoever or show the market, hey, traders are wrong, okay? And these are the points that we just talked about, okay? And that gives you a bad plan, right? It gives you a bad plan as we talk in the psychology section, okay? But at least we have a plan, right? A thorough plan. Short here, and then I'll stop here. Same thing, 72. Stop 3 points, right? Contextually too. Very, very ideal. This is ideal of placing stops, right? Drop down acceptance here a little bit, right? 68, battling again, but now guess what? Now we're getting to the bigger picture, right? So you know this is going to get rejected, so it's likely gonna and go back to your, guess what? Your POC, your range, right? So we have that from that 15-minute candle, we have such a huge, such a fast drop as well. Look how little volume here, it just swiftly goes through. And even if you don't catch it up here, right? Even if you can catch it up here, you look into this area. Guess what? If it goes away from this area, it's going to follow through. So you're short around 66. That would be another trade idea. And then your stop would be, you guessed it, on the edge of this 66, 69. 3 points. Contextually too. Perfect. Boom. You got yourself a nice trade. And then as we go down. So our next target profit is the POC, right? Which is over here. Let's aim for this area, right? I'm not going to be greedy and trying to follow through whatever. Make a good trade. So 54, right? I'm going to close at 54, 55, and I'll call it a day. Okay, and I don't want you to trade in this area after during. If it's not a trend day, if it's a balanced day and not a trend day, you technically don't want to trade during the power hour. Right? But if it's a trend day, like I said, if it's a trend day and you're long in the morning and you consider it's a trend day, you close it. You close it the position around to 3:30, 3:45 Eastern, or 2:40 in Central Time, right? So you close over here. That's it. You're done. Swift deflect swiftly around another one, right? Kind of hold off here a little bit, right? But selling keep continuing through, and big acceptance here. this is where it kind of stopped, right? Now you see tapering, it should be done, right? That's it. Yeah, you could form another long thesis here, right? Taper, taper, along around here, stops around here. Sure, you can scalp from 51 to 6 to this next acceptance area around here, right, which is 61, right? So that gives you another 10 points. So that's another plan, right? That's how you kind of play it. Risk very little too. So that is how we look into DOM trading and utilizing footprint charts to make a decision. And obviously, after in the power hour, you can see this wide range of big orders are trying to close in. You don't want to get whipsawed in this during this time. That's why I told you not to trade on these time, right? Get out. And that's today. News coming in. We literally have no trades down here. Swiftly all the way down. Big bounce area down here. Small orders, and you kind of go up. Acceptance here. Push, push. At open, we're heading to this acceptance area. Very nice island here. Same thing. Acceptance island. Drop down. Cannot push anymore. We go up. Right. Acceptance here. We kind of close our trade over here as we get accepted. Be done with it. Trying to retest once again, hitting this tiny island again. Push it back up. That's probably another trade for you. Stops are around here, right? 48, long, 52. That's fine. And it hits overnight acceptance area. See how many candles are concentrated here? Stops right there. Maybe a coincidence, maybe not. Maybe just the way it works. Acceptance, trying to get accepted, but nope, got rejected down. Trading, taper here, go above the tapering a little bit. So this is where the instant is wrong, where tapering doesn't work. And the reason for that is context, right? A big flush down, literally zero volume, so you would expect it to feel all the way up here, right? Or whatever, all the way up here. But since we have so many selling pressure going all the way back down again, so contextually you have to determine whether these kind of tapering works or not, because sometimes it just doesn't work. Sometimes tapering doesn't become tapered. Sometimes it get accepted, and then trading a big range, a big volume. So this may be a taper. This taper area. Now it fills up. It filled that tapering area, right? Sometimes that is a strategy. So you have to deal with the context here. Nice absorption, around 70, breaks above, cannot push anymore, once, twice, thrice, and boom, down we go. Right? Non-acceptance here, POC, right? Trade sideways, push against, push down again already, going all the way back up, and now we have this tiny ledge. Big ledge, right? Just pan out from 12 to 2 o'clock. And as the power hour ends, we have a nice flush down. And, but we simply don't trade this move. I mean, you can, but like I said, after 2:45, should be out. Yeah, there will be no trading. Don't be greedy. Right? That's not the trade I want you to have. Right? I want you to have a thorough planned trade that you know where you're wrong, you know when you're right, you know when the market is going trade against you or for you. Right? In this instance, it's very hard because look at how many participants are joining in and take a trade. Right? It's very hard to predict something, so best not to trade it. Right? Don't be greedy. All right. So that concludes with this talk. Sorry, an hour talking. Holy shit. All right. I will catch you guys on the next one.